Hello, and thank you for joining us here on the Clarity Core. Today we'll be exploring the topic New HSA Explained, the triple tax advantage you need for healthcare in retirement. Let's start with a simple but sobering truth. If you live long enough, one day, healthcare will become your biggest expense. Not your mortgage, not your car, not even your groceries. It'll be the cost of staying healthy. Hospital visits, prescriptions, doctor's bills, and insurance premiums that keep climbing higher every year. And yet, most people have no real plan for how to afford health care in retirement. They think Medicare will cover everything. It doesn't. They think they'll just pay as they go. They can't. But what if I told you there's a special financial tool hidden in plain sight? One that can save you tens of thousands of dollars in taxes, help you grow your wealth, and pay for health care tax-free for life. That tool is called the Health Savings Account, or HSA. And it's not just a savings account. It's one of the most powerful tax-advantaged investment vehicles available in America today. In this video, we'll break down what an HSA actually is, how it gives you a triple tax advantage, how to invest inside it like a retirement account, and how to use it strategically to pay for healthcare costs, tax-free, for the rest of your life. Let's begin. Part 1. What is an HSA, and why most people don't realize its power? First things first. What exactly is an HSA? A health savings account is a special type of savings and investment account created by the U.S. government to help people save money for medical expenses. But with one huge twist. It comes with incredible tax benefits. To qualify for an HSA, you must be enrolled in what's called a high-deductible health plan, or HDHP, a health insurance plan where you pay lower monthly premiums but higher out-of-pocket costs when you actually use healthcare. The logic is simple. If you're healthy and don't need a lot of medical care, you can save what you would have paid in higher premiums and instead invest it in your HSA. Now here's where things get interesting. An HSA isn't just a medical piggy bank. It's actually one of the most tax-efficient investment accounts ever created. Why? Because it gives you what's known as the triple tax advantage. Part 2. The triple tax advantage. The most generous in America. There are plenty of accounts that help you save on taxes. 401ks, IRAs, Roths, and so on. But none of them, not a single one, gives you this triple combination. Here's what makes the HSA special. 1. Tax-free contributions. Every dollar you put into your HSA is tax deductible. That means you don't pay income tax on that money. If you earn $80,000 a year and put $4,000 into your HSA, the IRS treats it like you only made $76,000. That's instant savings. It's like the government saying, hey, go ahead and keep some of that money, as long as you use it for health care later. 2. Tax-free growth. Once your money is inside the HSA, you can invest it, just like a 401k or IRA. And here's the best part. All of your investment gains, the interest, dividends, capital gains, grow tax-free. That means no taxes on profits, no taxes on growth, no taxes on compounding. Your money just keeps building quietly in the background, untouched by the IRS. 3. Tax-free withdrawals for qualified medical expenses. Now, here's where the magic completes the trilogy. When you take money out of your HSA to pay for qualified medical expenses, it's completely tax-free. Yes, you heard that right. Tax-free when you put it in, tax-free while it grows, and tax-free when you take it out. No other account in the U.S. gives you that level of tax efficiency. Not even a Roth IRA. That's why financial experts often call the HSA the triple crown of tax advantages. Part 3. The hidden wealth strategy. Using an HSA as a stealth retirement account. Most people use their HSA like a checking account. They contribute money, then spend it right away on doctor visits, prescriptions, or dental work. But the wealthiest investors, the people who truly understand how money works, use it very differently. They treat it like a long-term investment account, a secret retirement fund that can double as healthcare coverage later in life. Here's how. Step 1. Pay out of pocket now. Save the receipts. When you have medical expenses today, instead of withdrawing from your HSA, pay for them out of pocket. Then save your receipts. Why? Because the IRS lets you reimburse yourself years later, as long as those expenses occurred after you opened your HSA. So you could, theoretically, invest your HSA money now, let it grow for 20 years, and then reimburse yourself tax-free in the future for expenses you already paid decades ago. That means your investments compound for decades, tax-free, and you still get to pull the money out whenever you need it. No taxes, no penalties. It's like turning your medical bills into a time machine for wealth. Step 2. Invest, don't just save. Most HSA providers let you invest your balance in mutual funds or ETFs once you reach a minimum amount, often around $1,000 or $2,000. That's when your HSA truly becomes powerful. Because now, instead of sitting idle, your money is working for you, growing in the background for 10, 20, even 30 years. If you contribute the maximum every year and invest wisely, your HSA could grow to hundreds of thousands of dollars by the time you retire. All of it tax-free if used for medical expenses. Step 3. Use it as a retirement backup. Here's another hidden feature. After age 65, you can withdraw money from your HSA for any reason, not just medical expenses. If you do that, you'll pay ordinary income tax on those withdrawals, just like a 401k or traditional IRA. But there's no penalty. So after 65, your HSA effectively becomes a backup retirement account. You can use it for anything, healthcare, travel, or even everyday living, and only pay tax if it's not for medical costs. Meanwhile, if you keep using it for healthcare, it stays 100% tax-free. That's flexibility no other retirement account offers. Part 4. HSA versus other accounts. Why it's a hidden gem. Let's compare the HSA to the usual suspects: 401ks, traditional IRAs, and Roth IRAs. Feature HSA 401k. Roth IRA tax-free contributions, tax-free growth, tax-free withdrawals for healthcare. Withdraw anytime for medical penalty-free after 65, any use. You can see why the HSA stands out. It's the only account that gives you all three benefits: tax-free in, tax-free growth, and tax-free out. That's why some financial planners call it the ultimate retirement account. Part 5. The numbers. How much you can contribute and grow. As of 2025, here are the HSA contribution limits. $4,300 per year for individuals, $8,550 per year for families, plus a $1,000 catch-up contribution if you're over 55. Now, that may not sound like much, but the magic is in the compounding. Let's say you invest $8,000 per year in your HSA for 25 years and earn an average of 7% annually. By the time you retire, you'd have over $500,000, all tax-free if used for healthcare. And remember, you can also invest it aggressively while you're younger, since you're not touching it for decades. That's a massive advantage over traditional health spending. Part 6. Qualified expenses. What you can and can't use it for. So what counts as a qualified medical expense? The IRS list is surprisingly long. You can use your HSA funds for things like doctor visit surgeries, prescription medications, dental and vision care, hearing aids, long-term care premiums, Medicare premiums after age 65. You can even use it for things like acupuncture or chiropractic care, if medically necessary. But here's the catch. You can't use it for insurance premiums, except for long-term care or COBRA coverage. And if you withdraw funds for non-medical use before age 65, you'll owe income tax plus a 20% penalty. So treat your HSA like a sacred vault, reserved for future healthcare or retirement needs. Part 7. The power of compound healthcare investing. Let's put this into perspective. The average American couple retiring today will spend about $300,000 on health care over their lifetime. That includes premiums, copays, medications, and out-of-pocket expenses, even with Medicare. But if you start investing in an HSA early, say in your 30s or 40s, you can build a healthcare fund that covers all of that, tax-free. Imagine reaching 65 with a $400,000 HSA balance. You could use it to pay for everything from routine checkups to surgeries, without touching your 401k or IRA. That means your other retirement savings stay intact, while your HSA silently covers what everyone else fears most: medical bills. That's real financial peace of mind. Part 8. Advanced HSA Strategies. The Expert Moves. For those who really want to maximize their HSA, here are a few pro-level strategies used by financial advisors and FIRE investors. 1. Pay cash now, reimburse later. Strategy. As mentioned earlier, pay out of pocket now and save your receipts for decades. You can reimburse yourself anytime in the future for those expenses, tax-free. It's like having a secret refund button for your past medical bills. 2. Invest aggressively early. When you're young and healthy, you won't need your HSA for medical expenses. So invest your balance in broad index funds or ETFs to maximize long-term growth. Later in life, as healthcare costs rise, you'll have a much larger balance to draw from, completely tax-free. 3. Combine with a spouse. If both you and your spouse have HDHP coverage, you can double your contributions, up to family limits. That's twice the compounding, twice the tax savings. And if one of you turns 55, you can add an extra $1,000 as a catch-up. 4. Use it to pay Medicare and long-term care. Once you turn 65, you can use your HSA to pay for Medicare, Part B, Part D, and Medicare Advantage premiums, all tax-free. You can also use it for long-term care insurance, which becomes more valuable with age. That's an often overlooked way to turn your HSA into a healthcare pension. Part 9. Common Myths and Mistakes. Now, before you rush to open an HSA, let's clear up a few common misconceptions. Myth number 1. You lose it if you don't spend it. That's false. Unlike a flexible spending account, FSA, your HSA rolls over year after year. You never lose the balance. There's no use it or lose it rule. Your money is yours. For life. Myth number 2. HSAs are only for sick people, also false. In fact, HSAs benefit healthy people the most because they can invest their money longer and build wealth for future expenses. It's not just for hospital bills. It's a long-term wealth vehicle. Myth number 3. You can't invest HSA funds, not true anymore. Many HSA providers, like Fidelity, Lively, and Health Equity, let you invest your balance in ETFs or mutual funds, just like a 401k. You can even set automatic contributions and reinvest dividends. Part X. The future of healthcare and HSAs. Here's the reality. Healthcare costs are rising faster than inflation. And as life expectancy increases, people are living longer, but not always healthier. That means retirement planning isn't just about income. It's about sustainability. The HSA is one of the few tools that actually helps solve this problem. It combines the flexibility of a savings account, the growth of an investment portfolio, and the protection of a healthcare plan, all in one. It's the ultimate bridge between financial independence and medical security. Final thoughts. The smartest money you'll ever save. When it comes to taxes, healthcare, and retirement, there's no single tool that does it all perfectly. But the HSA comes incredibly close. You save money on taxes today. You invest it tax-free for decades. And you spend it tax-free on healthcare for life. That's the triple tax advantage most Americans overlook. So if you have access to an HSA, don't treat it like a simple savings account. Treat it like a tax-free retirement weapon. one designed to protect your future self from life's most expensive bills. Because one day, you'll thank your younger self. Not just for saving, but for saving smart. If you found this video helpful, hit like, subscribe, and ring the bell for more practical, powerful money strategies every week. This is the Clarity Core, where we help you master your money, invest with purpose, and prepare for the life you deserve.